Management at DLF. Sriram Khattar, MD Rental Business at DLF, is now with us. So talk to us about the overall scenario when it comes to real estate in India, especially North India. Tell us about the reasons for divergence in residential real estate and the rental space.
Okay, so the first question first. I think there was in the years that have gone behind a level of irrational exuberance that had come up in the real estate industry. I think the things are settling down now. The government has done well by bringing in the Real Estate Regulation Act, and it will now become a regulated industry. And I see a very bright future for real estate. Your second question on the divergence between residential and commercial real estate, I think residential had seen a lot of investment and not really end use, and that had created a sort of a minor bubble in the entire residential space. And I think that is taking some time for the stock to be absorbed. At the same time, the investment in end use investment in residential real estate is slowly coming back, and commercial real estate continued to do well because of the robust economy, India's comparative and competitive advantage in terms of a younger generation, English speaking, and its cost advantage. And I think that commercial space continued to do well. I see the next 2 years commercial space continuing to do well and residential space slowly coming on track.
Analysts have pointed out towards the high contribution of the rental yield assets in the portfolio. What is the total contribution of the rental arm to the overall portfolio?
In the DLF portfolio, in terms of the revenue, the rental business contributes roughly 60%, and in terms of a bottom line, it contributes an equivalent amount in the overall balance sheet of DLF. I see commercial real estate showing decent to robust growth. Fortunately, DLF is existing in micro markets where the locations are very good, and our work in the area of safety, sustainability and customer experience has proved that we can offer better than what others can do, and therefore given that, we should continue to do well.
What is leasing and releasing trends in the rental arm? Has there been a slowdown affected by leasing trends as well?
So our portfolio is mature. We have end of term leases that come up for renewal, and we see a trend where more than 90% of our leases get renewed at the same location, preferably in the same offices. And the 7, 8, 10% that leave our portfolio are the ones who have either moved to their own campuses or want to go to a lower cost option. And we see this trend to be very strong, especially given the quality of our portfolio and the quality of service that we provide.
What is the visibility on monetization of large concentrated land bank in DevCo given the developments in micro markets?
DLF has phenomenal, very good, high quality land banks, and a lot of them are licensed and are ready to be exploited. But it's a question of market demand and supply. I think from a DLF perspective, you would have seen in the last 2-3 years that we may have been perceived to be slow, but we've been very steady and solid. And I think that's the trend we will take in future, though as we go ahead, we'll probably keep increasing our pace of growth.
Are you looking at REITs for your rental asset? What is the kind of timeline that you're working for any REITs listing?
The REIT market in India is still very, very in its infancy. I mean, if you take Singapore and Hong Kong, for example, the REIT market is something like 220 billion US dollars. We have one REIT in the country today. We have just gone ahead with a capital raising about 2 years ago, where GIC of Singapore became a significant minority shareholder in our renting businesses. So while we continue to look at the REIT market, we do not think we will come to the market at least for the next 12 odd months. After that, I cannot say. It depends entirely on how the market evolves and what strategy is followed.
Give us a sense of total debt on the books and how is the current debt structured and what are the targets to reduce the debt to equity going forward.
So on the DLF books, debt is no longer anything of significance. I think as of 31st March 2020, the debt will be 3,000 crores. I think these questions related to debt for DLF are more an overhang of its past. I think DLF has gone much beyond that. And I don't think debt is either a concern or something that needs to be focused on as we go forward.
Thanks so much, sir, for taking our time for us. That was management at DLF talking about their business outlook.